Hello everyone, and thank you for joining us today for this free EUR-USD signal. We base all our work on the Elliott Wave SSI methodology that's been described time and time again in our webinars. If you haven't seen the webinar that described Elliott Wave SSI before, the one I held just recently, please do click on the link below this video on the page where you can then sign up to sit on the webinar and watch that. Now, the euro, as you know, is in a very challenging position at the moment. We are at a time where a key technical point of 1.2900 has been intercepted. So it's been broken, it's been tested quite a few times, and there's quite a few indicators here on this one chart alone that are telling us that a very aggressive continuation of the short-term downtrend is imminent. And the fact that the price is hovering so close to 1.29 right now is prime time for you to enter this trade short at very low risk. So let me just describe from Elliott Wave perspective what's going on here. Notice that on this hourly chart of the EUR-USD, we are at the beginning of a wave 3 in a stronger wave 2 post wave 2 movement downwards. Now wave 3, as you know, if you've been on the webinar that I hosted recently, you'll know that wave 3 in a 5-wave impulse is almost always the strongest and the longest. Now there are occasions where wave 5 can also be very strong and go way past wave 3, but we haven't quite reached wave 5 yet, so we'll get to that when we reach it. Why I'm recording this right now for you is because if you notice, we've now encountered 2 or 3 different signals that are all telling us short-term behavior in the short direction is imminent, and medium-term behavior as well as long-term behavior too is short for the foreseeable future. You notice in the news that the Eurozone is in continuing crisis. Spain is thinking about requesting a bailout. It still hasn't made up its mind. There are quite a few massive problems with the Eurozone that are obviously affecting the currency of the entire region. So if you notice, wave 2, the corrective wave, has ended at a point around here, the price being close to 1.3076, 1.307 at the time, and a wave 3, which, as you all know if you've been on the webinar, is one of the strongest waves in the direction it begins to take. And this entire move down is wave 3. It's the beginning of wave 3. So as you also know, any wave in a 5-wave impulse that is an impulse wave has 5 waves to it. So here's wave 1 and wave 2 that are seen to be complete in the overall down move for wave 3. Now that's just Elliott Wave telling us that yes, the trend is definitely short and that wave 3 has begun, and waves 1 and 2 of this wave 3 down have in fact completed. But what about other indicators and what do they tell us? I mean, do we just go on the basis of Elliott Wave theory here? Will it help? What if the count is wrong? We don't know. So we need external confirmation other than just Elliott Wave to tell us that yes, indeed, the term is short. So if you notice, there are a few things here to think about. You have the key level of 1.29, which has been breached once, and it's being intercepted again. So it's been tested again after it was breached the very first time around this point here, where the wave continued down. Then it pulled back a bit, which is normal to see a retracement. It's pulled back, it's gone up to the 1.29 mark, and notice the sharp decline all of a sudden. The price has attempted to go forwards, but it just hasn't. And that's because there is a lot of sell pressure here. This is a key resistance zone, and there are probably a lot of people, a lot of smart money sitting there just waiting to go short. And as you know, as I'm talking, notice how that level is posing serious resistance to price movement, and it's just very difficult for it to get past that 1.29 at the moment. So this is one key signal that we are indeed looking at a continuation in the short-term trend downwards. The second key indicator, if you know anything about volume spread analysis, we won't go into the details yet, but if you know anything about volume and how it impacts your daily decisions as a trader, notice how these bars here, the upwards moving bars during the retracement of the price action that's going up here, notice how the bars are at fairly reasonable volume. They're not at really crazy volume. So here's a really small candlestick that's at reasonable volume. Here's a smaller candlestick that's at higher volume. So what do we conclude from all of that? What we can say is that there is continuing sell pressure as we go up this retracement. And notice how the highest volume, where the largest number of orders have been executed, is at this candle here, which isn't really much larger. In fact, it's smaller than this candle here, which was at lower volume. But what that tells us from a volume spread analysis point of view is that higher volume at this particular candle, and the fact that the price was trying to move upwards, met with serious sell pressure. So the highest volume of the day so far, around about this mark here, has met with serious sell pressure, and the price is not being allowed to go any further long. Notice how the second candle right after that has immediately gone short. So Elliott wave telling us that we're in a wave 3 downwards. Volume spread analysis telling us that we're in a short-term move here. We have a candle telling us with the highest volume in the day so far that we are encountering serious sell pressure. The key level of 1.29 being tested again, and immediate sell pressure being exercised, the price continuing downwards again. This is a very, very good time for you to enter into a short trade. This is probably the lowest risk time that you can get into this short trade. So if you're an intraday trader, you like trading with very small stops, you could enter at market right now, go short at market, place your stop maybe 30 pips above or 20 pips above, and see through with the price action. If you're a long-term or medium-term trader, you want to place your stop maybe at 1.3 around here. That's a humongous stop, but at least it keeps you safe in case there's some volatility that causes some spiky movement. But the fact that we're at 1.29, the price is not being able to breach 1.29 again successfully. There's no open bars above 1.29 yet. Volume spread analysis here with the highest volume bar telling us that the price was attempting to move upwards, but it couldn't. It met with serious sell pressure. Look at the nature of the candle. The price was moving up, and the sell pressure forced the price to move back down again, followed by a red candle immediately after, signaling that we are now looking at short-term continuation. Elliott wave SSI, our primary methodology, telling us that there is downwards momentum at the moment, that we have completed wave 2 and that we are in a larger wave 3. And as you know, wave 3s in a 5-wave impulse are very, very powerful, and they go on for a long time. So I've done the analysis for you here. 1 and 2 of this larger wave 3 are now complete, and 1 and 2 of the intermediate wave 3 are also complete. So intermediate wave 3 is about to complete around this point, which is close to about 50 pips lower than where we are right now, and the major wave 3 has still got a long way to go. So if you're thinking about placing a good trade today, consider placing a short-term trade. Could we be wrong? Of course we could be wrong. The financial markets are not entirely correct. Are we right with a higher probability than normal, which is what good traders do? Yes, absolutely. This is a very high probability, low risk trade, and we encourage you to take it if you're considering getting into this market today. This is, however, just advice, but it is very high probability advice today. So do take it into consideration that there's a lot of technical and fundamental signals. The fundamental signals being that Spain is in a mess, the Eurozone is in a mess, Britain is in a mess. The European British region is not doing so well at the moment. Elliott wave is reflecting that in this particular count, saying that, yep, we've got wave 2 that's been completed, wave 3 has begun, and things are looking pretty bad for Britain and for Europe. We've got wave 2 of this big wave 3 complete. Volume spread analysis saying nobody's being allowed to go past 1.29, go short, go short. We seriously think that this would be a good trade for those who would consider taking it. Hope you've enjoyed it. If you are looking to enter at an exact price, then ITM Financial's memberships allow you to do exactly that. We provide exact open prices, entry prices, stop losses, take profits for moves to be made, both on an intraday scale as well as on a swing position trade. So we will give you signals for entering at the right price. Right now, I've pretty much given away everything in this video, but in future on other currency pairs, as well as this one, of course, we target over 12 currency pairs, as well as gold, silver, and oil. So if you're interested, just for watching this video and being a loyal subscriber, we are giving you a 25% discount today. If you want to go and purchase a membership right now to get in on the action, join all the other ITM Financial members in joining us in this trade and tens of other trades that we'll be executing over time. You're strongly encouraged to take action today. The discount coupon code is 25 once. You can enter it into the little coupon code box at checkout, and that will allow you to immediately get a 25% discount. And that's all from me today. So looking forward to having you on board, and more importantly, looking forward to seeing you do something about this trade. All right, take care. We'll be back soon.